Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on Wefunder, but also the different resource providers and mentors helping founders along the way. Huzzah! In this interview, we chat with Nathan Beckord, the founder and CEO of Foundersuite, the platform that brings structure, speed, and efficiency to fundraising and investor relations. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on Wefunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. Wefunder gang, take it away.
Hey everyone, welcome to another episode of Adventure Capital. Jonny Price here. Today I'm joined by Nathan Beckord, who's the founder and CEO of Foundersuite. Nathan, welcome to the podcast.
Thanks for having me, Jonny. Love it.
Maybe you can start by giving us the quick elevator pitch on what you guys do at Foundersuite.
Yeah, we are playing in the same general sandbox as Wefunder, but we make software and tools for what I like to say, kind of raising capital the old traditional way, which is raising from angels and VCs. So we make a set of tools for that with a database of investors, a CRM for managing your pipeline of investors, pitch deck hosting, investor updates, email tools, documents and downloadables, and then a data room as well. So kind of a whole set of tools for raising a traditional round from angels and VCs.
Love it. And how did you come to launch Foundersuite? What's your personal background?
So out of college, which was a million years ago, I went to work in investment banking for a little bit, worked for Piper Jaffray and JP Morgan. And I even got to work during some of the go-go like .com days when companies were being formed and go public like 6 months later. It was totally crazy.
Wow, yeah.
And then after that, went to New York and worked for JP Morgan and helped some companies raise like later stage funding rounds and did that for a little while. And then came back out to Silicon Valley and hung out a shingle called Venture Archetypes with a couple friends. And we were helping companies raise early stage rounds. So we sort of took the JP Morgan playbook, brought it down to the early stage of seed and Series A and did that for like 10 years. And then but I really didn't want to be a consultant forever, didn't want to, really wanted to be an entrepreneur and have a startup. And finally, one day just had this idea of like, why don't we build some tools for this process, right? We're helping all these companies raise capital. A lot of it was using like a Google spreadsheet or an Excel spreadsheet to track all the investors and stuff like that. Like, let's build software for this. And so we got started over 6 years ago doing that and have just been building every day, expanding the product, expanding the platform, 1 or 2 new features a year, and really have grown a lot in the last couple of years.
Love it. And yeah, maybe you could talk more about the features that you had. You talked about it earlier, the database, the CRM, the kind of pitch deck, the data room. But like, let's say we go into a little bit more detail. Let's say a founder, wants to raise a seed round, they kind of engage with Foundersuite. Like how do you help them? What does that kind of user journey look like for the founder there?
Yeah, we've been building tools. If we think about how a traditional fundraise works, step 1 is you build a target list of investors. Step 2 is you kind of manage them, send them your pitch deck, send them your updates, all that stuff. So we've kind of been building tools along that journey, that fundraising journey. So step 1 would be the investor database. You come in here, you search on ad tech or medical devices, whatever your category is, and maybe you filter it down by angels or venture firms and build a target list of maybe 75, 100, 300 investors that are relevant for you. You load them into the CRM. So the CRM is like a Kanban board, if you're familiar with that structure, where each investor has a little card and you're moving them through the stages like contacted, pitch, diligence, committed, said no. So you're kind of managing all these discussions and activities you're having using the CRM. Meanwhile, you'll probably be sending them a pitch deck. So you upload your PowerPoint, PDF, you send it out to those investors. You can track and see who opened it, how much time they spent looking at your pitch deck. Maybe you're sending them a regular monthly company update. We have a tool for that. So that would just be a more text and images type of document, like a newsletter you're sending to investors to nurture them, to keep them up to date with your journey. You're using our email tool to do like follow-ups, right? You just had 20 pitch meetings last week. Maybe you want to send a batch email to all those 20. We've got this nice slick tool that you can create like email templates, send it out to all those 20, and it's going to be sent individually. So it looks like you wrote 20 emails, even though you only wrote one email. And then lastly, as you're making progress with these investors, we have a collection of documents like term sheets, cap tables, things like that you can download. And then we have a data room, which when you're getting into due diligence with investors, that's when you want to start sharing your really confidential information, your intellectual property, your financials, other stuff like that. And then you can send it out to investors and really track what they're doing and limit what they can do. So maybe you just want to have them view those documents or view plus download, stuff like that. So if you, again, kind of thinking about the fundraising journey from start to finish, we're building like tools for each step of that journey.
Yeah, I love it. You must be getting so much data. Like when I think about like one question I've been trying to get more data on recently is like, how many investors are we trying to connect with for this round, right? And then of those that we're trying to connect with, we may be doing cold outreach to, or maybe we have a warm intro. But how many are we getting meetings with? And of the ones that we get meetings with, how many are going kind of through that Kanban board CRM funnel? Do you have any on that first question, like for an average, pre-seed or seed round, like how many investors are founders? Do you have a sense of like the average Foundersuite founder? How many investors are they reaching out to? How many meetings are they having?
Yeah, it's a great question. It's pretty interesting. And sometimes these numbers like shock and scare founders because they're
high numbers.
At those early stages, I'd say the average is probably about 200 to 300 investors at sort of the top of the funnel, right? Call it 300 investors, top of the funnel, and bottom of the funnel, meaning what percent of those end up like writing a check. We're seeing roughly like 5 to 6% conversion rate, right? So you can kind of do that math. So that also means, this is where it sometimes shocks founders, that means you're getting rejected 95% of the time of the people you're going after.
A lot of those ones you're emailing, I guess, are not responding, right? But then the ones that respond and you set up a meeting with, then maybe, that's a percentage of the 300 that you reach out to.
If you want just like simple math, I mean, you reach out to 300. Now, there's variations in this, right? Are you cold emailing 300 or are you getting personal introductions with a strong, warm intro from people? Now, those are going to change your math, right? Quite dramatically. So, yeah, there's a lot of variation in how you do it. Obviously, the more you're getting those warm intros, the better, and your rate's going to be. And I've seen some folks who have a smaller top of funnel, but they really work it, expertly, I guess you could say.
And they're more kind of targeted in the outreach, and they're more kind of thoughtful in how they're reaching that investor. And one thing that in a sense, there's definitely some overlap right between Wefunder and Foundersuite. Like we have the email updates feature. You guys have that as well. We have the pitch deck on the Wefunder page. You guys have that as well. But for me, there's a really nice complementarity because you're kind of focused more on helping founders raise from accredited investors. Typically, that makes accredited investors makes up about 50% of investment volume on Wefunder. We have about 30,000 accredited investors on Wefunder. They're making 50% of investment volume. But now we can also get in front of unaccredited investors. And but for me, if there's a company that's on Wefunder, one of the reasons I love the partnership we have with you, and I think we're sending kind of founders in both directions, referrals wise. But it's like if a founder's on Wefunder, then you can just help them with outreach to more angel investors at the top of the kind of accredited investor funnel. Those investors, hopefully come in and invest through the Wefunder page. But that's all just kind of additional, kind of investors at the top of their CRM and top of their funnel. So that's like a huge win-win for that founder. And then, founders that are, maybe starting kind of conventionally pitching more traditional angels and VCs on Foundersuite, if they want to kind of push the gas pedal on the rounds by publicly promoting more and getting in front of unaccredited investors and Wefunder investors, then they may come over to Wefunder to help close out that round, or even if the round is coming together, then having them kind of pitching them on this community round idea, where like allocating part of their round to their customers and communities. So there's definitely some overlap, but also I think some really nice kind of synergies there. I'm curious, like a couple of success stories, like founders.
Wait, can I actually jump in there real quick? I mean, I think I'll just add my 2 cents to that, because I think just from my observation, I've been watching crowdfunding for a long time. And I feel like even just a few years ago, there was a pretty distinct separation between like raising from angel and VCs and raising crowdfunding, which was unaccredited and your fan base and stuff like that. And I feel that these worlds are kind of blending, bleeding. I don't know what you want to say. So definitely becoming more overlap. But 100%. I think, we're seeing some folks kind of run parallel campaigns like, hey, here's my angel/seed VC track. And then I'm also going to do community round or something analogous to that, where I want to tap the fan base or customer base, whatever it is. And it's kind of interesting to see that change, because it used to be so separated. Yeah.
Totally agree with that. And I think for me, there's kind of two use cases for founders, right? The first is, look, if the VC or angel round is coming together very quickly and easily, then it's like, they may decide, and Mercury is a good example of this, right? They raised a 120 million Series B, and then at the back end of that opened up an allocation for their customers, right? So it's like we quickly raised the VC round, then we opened up an allocation to their customers at the back end of the round. The other use case is if that kind of round from angels and VCs is taking a little longer, and I think as we enter 2022, right, and VC market, kind of early stage investing, I think is definitely going to cool, right, in 2022. We're already seeing that versus 2021, which was like an unbelievably, record breaking year. If it's taking a little longer for rounds to come together, then more and more founders, I think, will say, okay, well, let's push the gas pedal here. Let's catalyze things a little bit. Let's go to our customers and community, start raising money from them. That gives me a little more leverage in the conversations with VCs, right? It gives me a little more optionality. It's like kind of if we're kind of waiting to try to find the lead investor and we're kind of circling around, if you can say, well, here's our Wefunder page, we're seeing all this money coming from our customers. Maybe it kind of enables the founder to push back a little bit more on that investor that's trying to beat them up on valuation. Gives them a little more leverage. So those for me are the two options of how we're seeing founders kind of combine, kind of conventional capital and community around. What are a couple of success stories of founders that have raised on Foundersuite?
Yeah, it's there's so many. I mean, we have a couple thousand. It's pretty fascinating. I mean, I'm just thinking of a couple top of mind. It's kind of like if I had 100 kids asking me who are my favorite kids. A couple, just to show the sort of interesting diversity of startups raising capital. Like, here's a few success stories, I guess you could say. One is we have a company called Prion. They're doing, the founder was really the one who sort of invented the original IP that became Alexa, and now he's doing cool AI stuff, which I can't even give the pitch. I will totally butcher it. So that's advanced AI that's already probably smarter than me. We have another one called Mod that is making like sexual wellness and sex toys and devices and stuff like 10 years ago, if you asked me, could a company like that raise venture capital, I would say no way. But they're kicking ass and taking names. Another one called All-Star Gaming. I love this concept. Nick Cuomo's the CEO, and they've done really well. But basically, they're creating a platform where I can, if I want to be a professional gamer, video gamer, I can like record my games, my little snippets. I can like create my portfolio of awesome little clips from this and like socialize and circulate that. And it's kind of a platform to help people become professional gamers, right? Again, ask me like 10 years ago, is that a career choice? Now I'm like, my kids are spending a lot of time on Roblox. Maybe I should kind of point them in that direction, right? Because some of these guys are making crazy amounts of money. So there's a few examples. Yeah. Uh-oh, shoot. I can't hear you.
Sorry, who's on mute there? Thanks.
There we
go. We also have a super eclectic collection of founders on Wefunder. From kind of tech startups is obviously the most common, but all the way through to breweries and distilleries and coffee shops and restaurants. Not venture backable businesses, more Main Street businesses, as well as biotech and movies and soccer clubs. So we definitely share that pretty diverse set of customers on Wefunder as well. So what are some of the lessons? I mean, you've worked with so many founders down the years in helping them raise money. What are some of the things that you've learned as like, these are the keys to successfully raising your round as quickly as possible?
Yeah, sure. Couple of the main ones I would say that I'm seeing patterns, and let me back up. These are patterns I've learned from helping companies raise capital, patterns I've seen customers on our platform do, and then we have our own podcast called How I Raised It. You've been on it, and it's interviews with founders on how they raise capital, and we've done like 240 of them. And so like we've seen some interesting patterns on all these touch points. I'd say the 2 or 3 or 4 top things are they spend the time researching and qualifying and building a highly focused investor list. A lot of founders skip that step. They want to just, they'll see we have 10,000 investors in our SaaS.
Let's email them all. Yeah.
Let's email them all. Let's blast and we'll see who responds. Like, no, that's terrible. You got to take the time to really curate a highly targeted list. Yeah, so that's.
I've been thinking the same on the Wefunder side as well. We have a podcast as well, venture capital. This is it, and Tyler Hayes was the CEO of Atom Limbs, and he was on it a few weeks ago, and he said this phrase which I love: you got to find people that share your crazy. And for me, it's like you got to find investors that are really, really excited about what you're doing, and so that tells me that you got to be hyper targeted in the marketing. And way better to be focused on super niche. In the Wefunder sense, it's kind of like an audience of potential investors, right? In the Foundersuite and the accredited investor sense, it's like, who are the angels that are the most likely to be excited about what I'm building? But yeah, it's curated, it's personalized, it's hyper targeted. I think both on the Wefunder and Foundersuite side, kind of same learnings.
In that. Founders don't want to take the time. It takes time. It takes time to build that hyper-targeted, curated list. It usually means, like in Foundersuite's case at least, first searching on that category, SaaS, whatever it is, medical devices, narrowing it down by angel or VC, and then literally kind of going, clicking through their web pages, looking at their portfolio, looking at their team bios, maybe clicking through their LinkedIn. I mean, it takes that level of sort of research that you really can't skip, and really finding the ones that are, sharing your crazy or whatever. I love it. So that's one. I'd say once you've got a really hyper targeted, really curated list, it is important you try and get the introduction to those folks. I know this is something where traditional fundraising and crowdfunding differs a little bit, but like venture capital and angels still run a lot on personal intros. And so, if you can find a mutual connection to make that intro, if you can build that mutual connection by maybe reaching out to a fellow founder that an investor invested in and kind of work your way through that founder. I mean, there are a lot of different ways to do that, even if you don't have a huge network, but trying to get the intro if you can. People will skip that step and go straight to cold email because cold email is easy, but again, not always the most effective way. I would say, where are we at? Third on the list is just, and maybe this is really number one on the list, having a killer pitch. Like your pitch needs to really resonate. Any active investor is getting hit dozens, sometimes 50, 100 times a day by startups coming at them with their pitches. Your pitch has to be crushing it, amazing, inspirational. It needs to touch me emotionally. It needs to hit my financial brain, all on the same 10 slides, right? It has to do a lot. So your deck has to, your pitch has to be amazing and just crushing it. And a lot of people just have struggled with that, right? Because it's hard to create a deck with that. It's like saying Jonny, you need to write a bestseller.
Right. Yeah.
That's not so easy to do, right?
Yeah.
Yeah. But that's really what you need to do. And then I guess the last thing I would mention maybe is if you're doing, and it probably applies to crowdfunding too, but if you're doing a traditional round, a lot of it is driven, yes, by your pitch, yes, by what kind of business and metrics you have, but a lot of it's driven just by momentum of the deal itself. And so if you can get momentum going with investors, that sort of feeds on itself. Investors can smell that momentum. They can pick up on
a
deal that is getting hot, and that gives you all the leverage to set terms and timeline and all that stuff. So yeah.
Love it. This is kind of the inverse question, so maybe it's just the opposite of what you just said, but like if that's some lessons on, kind of how founders succeed, what are some things you've seen folks get wrong?
It is kind of the inverse, but I would probably start with that pitch, right? I see so many bad pitch decks, even for our customers who I love because they help me pay for kids' clothes and stuff like that. Like,
yeah.
And like, send me your deck. Let's, maybe they're like, I'm really struggling with my fundraise. Like, okay, first step, send me your deck. Let's take a look. And if the deck is oftentimes super dense, super cluttered, lots of, it's like the whole history of this company down to the minute, where it really needs to be a
font size 8. Yeah, very
exactly.
Complicated like charts and pictures. Yeah.
Too much. You have to tailor it to like an investor analyst who's flipping through it in a minute on his phone.
Totally.
Right.
Totally. Yeah.
So yeah, that's one. And then basically just the inverse of what we did. Like
untargeted outreach, cold outreach. Yeah.
Yep. And the momentum piece, I'd say people, and that's hard because, I said you got to get momentum going. Well, you're also a founder, you're a CEO, you're busy. It's hard to spend the time you need to really run fundraise. But what happens, I see founders who are spending 2 or 3 hours a week on their fundraise, and the thing just never catches any heat.
That's a great piece of advice, I think, right? It's like, if you're just it's better to do 20 hours in 1 week than to do 2 hours over 10 weeks.
Yeah.
Because you need that spike, you need it to pop. That's a really great insight that maybe isn't always kind of immediately intuitive to a founder that's coming at this for the first time.
Is that true on crowdfunding too? I feel like crowdfunding also has that momentum dynamic, right?
Totally. Yeah, you want to kind of coordinate it and you want to get it to spike. It's probably a little like there's a private period at the start of a Wefunder round, right? And the amount isn't visible, and it's probably a little bit more kind of behind the scenes, and so there's a little bit more kind of leeway in that private period. But certainly once it goes public, it's like, okay, you want it to be going quick to generate that FOMO, just as with a regular Reg D round.
Mm-hmm.
Yeah. Curious, we launched this community round website recently, this community round concept. What's again, you've seen a lot of founders raise conventionally from angels and VCs. You've seen some founders use Wefunder as well. What's your take on Wefunder and this community round concept as a way of raising money for founders?
I think it's very interesting. I think it's clever. Good job. I think obviously I could give the sales pitch for it, but I think it's interesting to be able to raise money. It's really interesting to be able to raise money from your fan base or your customers, which,
Right.
like, even thinking about Foundersuite, we're not raising money right now, but we have this pretty large, like, I would never have really thought about crowdfunding for us, for example.
Right.
But now that we have this pretty decent fan base / customer base, we
Right.
have our own podcast, we have sort of a social media following, as well as people who are actually cutting us a credit card swipe every month. Like, it could be very interesting to tap that base and then engage them. One thing I've always said sort of in general about crowdfunding is like, hey, maybe you're not going to be getting like the strategic. Let me back up. One of the things I've always sort of thought about kind of venture capital versus crowdfunding, right? Do you want the marketing and social boost of crowdfunding, or do you want the strategic advice of venture capital, which is often people who have founded companies, taken it public, right? And so I guess in some ways you might be able to have both, right? If you're doing both,
Love
and that's
it.
interesting.
Totally agree. That's what we're trying to say with this communityround.com website, right? It's like, we think VCs are great, add a lot of value, take a board seat, have trod that journey before, can provide a ton of expertise and advice. And we also think it's very good to delight your customers by letting them invest in you and build stronger ties among your community. And so, to do both, raise from a few VCs, and then instead of raising from one more VC, allocate that last 20% of the round to your customers and community. For me, there's benefits of both sides. So, why be a slave to the tyranny of the or, as they say? Couple of last questions for you, Nathan. Firstly, is there one company, I don't know if you saw the petitions feature that we launched recently, where you can go and petition a company to launch a community around and let the people invest. So there was one, for example, for SpaceX that's going around right now. But what's one company that you would love to be able to invest in if they let you? I mean, you're probably accredited, so you you could do it through Reg D. But what's one company that you think the people should be allowed to invest in?
You're talking beyond our customers, right?
Yeah, or one of your customers could be.
It's a fun. I think I saw something going around, maybe on Stonks, which is a thing. They were trying to petition their constituents to be able to get into Twitter. Right now, Elon Musk is taking it public, and he's raising capital from venture firms. Let's
launch Twitter on Wefunder. I like it. Now it's getting private again. Wefunder.com/Twitter. That would be a nice one. I like it. Elon, if you're listening, let the people invest, man. Let us get a slice.
There we go.
That's a good one.
It's kind of funny because you can obviously go buy Twitter stock, right now. But there's this whole play to let's take a piece of it when it goes private. Let's be one of those private investors. And I guess the argument there would be, Elon's going to work his magic and make it more valuable during its private period, and then it'll maybe go public again at some point with a huge pop, and you'll have a big return. So I guess I'm taking the easy road. I'll say Twitter.
I love it. That would be a great one. That's probably my favorite answer to that question that we've had. Okay, and then last one. You've already given a bunch of amazing advice on fundraising strategy, but it doesn't need to be about fundraising. Could be something else. But one piece of advice that you would have for a founder that's somewhere on that journey of starting a company.
Yeah, I'd say, and this kind of ties to, our industry of venture and angels, but start building relationships with potential investors early, like even months, even years before you even start your startup. Like, I know some of our customers and people I've gotten to know, I'm thinking of two different scenarios. I'll tell two very short little stories. Mm-hmm. One was, we're seeing patterns of startups where they are cultivating and nurturing relationships with investors like a year in advance of raising money. And some of that is simply like asking them like, hey, I see what you're doing. This is what we're doing. Can I kind of keep you up with our journey? Can I add you to our investor update list? And you're sort of nurturing investors for many, many months before asking them for money. So that's one thing that is really, really effective. I've seen that taken even to like a further extreme where I know a couple founders who know they want to be an entrepreneur eventually, and they're working for a startup right now, and they'll kind of volunteer to help the CEO on their fundraise, do all the pitch revisions, managing the CRM of all the investors, whatever it is, right? Just so they're getting involved and maybe even coming on some of the pitch meetings and stuff like that. So they're sort of building that investor network in advance. And so really the piece of advice is, like, if you think someday you're going to raise capital for a startup, even if you don't have a startup yet, start to kind of cultivate some relationships with investors now in whatever form that takes. That's okay. So it'll make it much easier. The cold start problem with founders who like started something and now they are almost out of money, need to start raising money right away, but they have no network, no connections. That's hard to overcome sometimes. So
yeah. I love it. That's a really, really cool idea for folks to think about. Nathan, thanks so much for coming on the podcast. It's been really fun to have you, man. And it's great to be working together on Foundersuite. I think it's a great resource for Wefunder founders or any founders really that are looking at raising capital. You guys just make it a little bit easier for them.
Likewise, love what you're doing. Keep up the innovation. Pretty cool with the community around stuff. And let's keep finding ways to collaborate and work together.
Love it, man. Thanks so much. Bye.
Thank you for tuning into another episode of Venture Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, Wefunder's here to help. Be sure to like and leave a review, gang.